Hi, and welcome to Redeye. Today we are joined by Gaming Innovation Group and CEO Richard Brown, who will present the Q1 report. This will be followed by a Q&A, and if you have any questions, you can send them through on the web. With that, I will leave over the word to you, Richard. Please go ahead.
Perfect. Thank you very much, Hjalmar. Good morning, everyone, and thank you for joining me today for Gaming Innovation Group's Q1 2023 report. The company has had a very strong start to the year, not only financially, but also operationally and strategically, with a number of steps forward in terms of creating further potential growth for this organisation. To touch on some of those highlights in the first quarter, we reached all-time high and successive all-time highs revenues and EBITDA for the group. The platform and sportsbook continued its positive commercial momentum, signing 7 additional contracts during the period. We launched the Enterprise solution, a new product vertical within the platform division. Our media business has expanded its initial partnership relationship with News Corp to take that project into international markets. We completed the acquisition of the highly reputable AskGamblers assets and returned those assets to month-on-month growth in a short period of time through a number of small short-term initiatives. To dive deeper now into the financials of the group, revenues came in at 28.4 million, up 49% year-over-year. Adjusted EBITDA came in at 11.7 million due to the growth of the revenues, but also the margin expansion that we've been focusing on over the last periods, and up 75% year-over-year. EBIT also delivered a significant increase with 94% year-over-year, up to 5.6 million in the period. To move on to some of the more details around the media business, revenues came in at 18.4 million, up 31% year-over-year, and excluding the acquisition of AskGamblers, revenues grew by 13% year-over-year. The adjusted EBITDA came in up 17% to 8.1 million, and the EBITDA margin came in at 44%. This was impacted by several one-offs during the quarter related to transactions, spin-off costs, and also some investments in proprietary technology during the period. Publishing reached all-time high revenues of 31%, and we saw continued growth of above 30% in our paid media division, coming off the back of a very strong Q4 where we had the FIFA World Cup. First-time depositors ended up over 110,000 in the period, a 59% increase year-over-year. 95% of those FTDs had a revenue share, perpetual revenue share component to them, and we have seen very strong underlying growth in the publishing business, in addition with the AskGamblers FTDs, which contributed around 7,000 in the period, and the paid FTDs continued its momentum with also good growth. In terms of the revenue split and distribution, 65% of the revenue came from revenue share agreements, up 59% in the comparables. This is continuing our trend of focusing on high-value customers and increasing revenue share percentage. The US organic traffic also increased by 76% year-over-year, and revenues from the Americas in total increased by 34% year-over-year. A very strong growth in Latin America in particular is continuing that momentum. We have also seen significant growth over the periods in what we consider legacy or scaled markets, up 13% year-over-year. And our fantastic marketing gig marketing compliance technology, Gig Comply, signed an additional client during the period and renewed with 2 of our larger customers in the period as well. Just to touch on some more details around the AskGamblers acquisition, it was a fantastic asset group, and we saw multitude of opportunities to deliver with that. And the transaction was completed fast and on the 31st of January. The post-merger integration plan is in full swing, and as I mentioned in the highlights, a number of those have resulted in strong month-on-month growth of the assets, growing 25% in the run rate compared to when we took over. We are also executing on the technology migrations, with the first website of the group, of that asset group, migrated during May, and we anticipate to be able to complete the migrations throughout the end of this year, with much greater creating much greater product capabilities and potential for growth. The execution of that plan continues. We are very satisfied with the initial progress, and we see a multitude of opportunity with the asset group. Moving on to the platform and sportsbook business, a fantastic quarter for this particular segment. We reached all-time high revenues of 10 million euros, a 100% increase year-over-year, of which 52% of that growth came organically, and 66% organic growth if you exclude the premium fees that we still received during the Q1 in 2022. As I mentioned earlier in the highlights, the strong commercial momentum continues, with 7 new agreements signed during the quarter. That continues to secure and build up future revenue streams for this particular segment. That leads me very nicely into the integration pipeline. One brand went live during the quarter, and 4 are awaiting either client or regulated decisions to go live as the projects were completed from our side. We have a significant delivery pipeline with over 21 brands in the integration pipeline now anticipating being delivered in the next 12 plus months. This secured revenue that is going to continue to build up will not only provide a future potential for growth, but also margin expansion, as those contracts we anticipate to have a higher contribution margin going forward. Also importantly, more than 10 of those new contracts will also have the sportsbook and platform products as we continue to ramp up and expand our sportsbook verticals offerings and potential clients. As you can see, this is something I touched on in the Q4 report. That underlying momentum within the SaaS business is continuing to build as we add new clients, as our previous or legacy clients continue to grow, and is creating good, strong momentum. On Q1 last 12-month basis, we're now up to 31.4 million euros. For the first time, I'm also going to talk a little bit more about the operator GGR and the distribution of that from a geographic perspective, because I know I had several questions and inputs around that from the investor community in the past. We would look at this from an operator's GGR perspective, and we've seen a significant increase in the diversity there. We've also taken the decision 1 or 2 years ago to expand globally, and that's resulting in that change in distribution of the markets, where Europe used to represent 72% of revenues, it's now down to 64% during that period. We've seen a very strong growth in Latin America, with now that accounting to 14% of operator GGR, and North America representing around 13%, and rest of world, the remaining 8%. Another one of our strategic initiatives that we embarked on several years ago was to focus almost exclusively on regulated or soon to be regulated markets. Now 91% of the operators GGR is coming from locally regulated or soon to be locally regulated markets, as we continue to push towards being the partner of choice for regulated markets. I will touch on something that contributed well in a launch that we're very pleased with in the platform division, which is the Enterprise solution. We launched this in March and completed where we see this as a completely complementary to the software as service licensing model. It enables us not only with a new product offering that can actually match into a demand that's there in the market, but also to an additional commercial model for us to build from. This solution actually provides the technological solution and operational autonomy for clients who are wishing to modify, enhance, or build upon GIGSEK's own application, therefore enabling them more freedom and ability to execute on their product roadmaps. We've seen this demand in this market building up over the last periods, over the last 1 or 2 years. So about 18 months ago, we started creating the technology in order to be able to really efficiently and effectively offer this solution towards the market. And we're very pleased to see that development work over the last 18 months has then resulted in our first client signing for this type of model. Just to cover off a few of the events after the end of the quarter and a summary. One of the important steps for us after the completion of the acquisition of Sport & Co last year, we've successfully launched and migrated all of the GIG Sportsbook legacy contracts onto the Sport & Co solution. There's been a tremendous effort from the teams involved over the last period to complete that flawlessly with no downtime related to the clients experienced by the clients. It also enables us now to show and demonstrate a fully integrated product solution across platform and sportsbook that can continue to drive forward towards new sales and new commercial agreements. We also, as I mentioned earlier, completed the first technical migration of one of the websites within the AskGamblers group, and media had a strong trend with FTD acquisition up 30% year over year. April has also developed positively with revenues around 30% up compared to the same period last year. Just to walk through a little bit more on the strategic review that we announced in the Q4 report in February, with the intention of spinning off one of the business units, so we have 2 independently publicly listed entities. Planning began well during the first quarter, and we now move into the execution phase of the various different items within there. We do so in a methodical way. We do it in an execution-focused way in order to be able to ensure that we apply best practices and ensuring the best possible outcome from the spin-offs. Just to summarise, GIGSEK has delivered once again an all-time high revenues and EBITDA for the quarter. We have had strong and good development in pre-tax and net pre-tax profit and net profit, and our cash conversion ratio is consistently improving, with that ratio increasing by 36% year over year. GIGSEK is expanding and with a diverse geographical footprint, supporting the growth opportunities across both the media and the platform and sportsbook businesses. The continued enhancement of the business's operational position with targeted margin expansion and increasing cash flows. The business remains excited and dedicated towards improving throughout 2023, and with a focus on delivering on the company's long-term visions and ultimately creation of value for shareholders. With that, I would like to just pass back over to Hjalmar for the Q&A. Thank you very much for your time this morning.
Okay, thank you for the presentation. Maybe we can start where we kind of finished the trading update, 30% growth in April. Can you remind us of what was April last year? Was any specific, if you compare the month last year compared to this year, looking at the growth?
No, I think just one point is we obviously consolidated the Sport & Co numbers from the 1st of April, so we're very pleased to be delivering 30% of growth, including that comparison point.
Right. And you mentioned in the media segment that the year kind of started a bit soft in January, February, and then improved a bit in March. Can you explain what was there specific behind that, or just typical seasonality, and why did it improve in March?
Predominantly typical seasonality, and I think also coming off the back of a Q4 where we had a FIFA World Cup, there was probably a little bit of a lull in event structures and such. We also saw margin in February being below average in sportsbook for both our sportsbook but also a number of our customers, and given media's exposure to that segment, that also played a role. But then we were able to recover well during March in that regard.
All right. And you also mentioned the Google update in the report. I guess that happens all the time, but it sounded like it was something more of a positive impact this time. Can you talk a bit about that?
I think, Google has been consistently updating the algorithms. They often make more material changes at various periods, and we saw that this was kind of more material change to the algorithm, and we feel that we benefited well from it in the initial takes. I think we've been consistently focusing on product for quite some time that ultimately will lead to a continual improvement in the rankings, and we've seen that in the development of the business over the last 2 years, so I'm pleased to see that continue.
And the margin in media was a bit lower than normal. Despite AskGamblers coming in, but you did mention that you have some cost for a strategic review there. But maybe just looking at AskGamblers, have you kind of invested more in that asset and kind of which maybe limit margins, or any specific that kind of took down the margin?
There's a couple of investments that we made, not only with AskGamblers, but within the overall segment, in some of the marketing technology that we use. That was kind of more of a one-off project in regard. So that obviously impacted the margin during the period. We also then, on an overall group level, had around 500,000 euros of costs related to the spin-off project during the quarter. So that obviously impacts the overall margins in both segments as well. So just kind of, we're very pleased with how we are, and we see so much potential. So if we have a 3% point weaker margin for a period, for a quarter, just in order to make sure that we continue to execute on the growth, we're very content to do so, because we see the value, the cash conversion continually improving as well.
And looking at the FTD intake in media, the publishing part was very strong this quarter. Paid has been really strong during 2022. Now it's just publishing taking off, partly, I guess, because of AskGamblers coming in. But is there anything more that is driving these improvements?
The improvements are not just from the AskGamblers coming in. There was actually meaningful improvement in the FTD generation from the kind of historical or publishing department as well. Again, a lot of the work that's been going on over the last 12, 18 months starts to pay off, both in terms of rankings, but also in terms of product conversion rates, etc., that start to drive through. We also had the News Corp publishing deal that adds to those numbers, but that underlying business is performing well. And
mentioning the partnerships, what kind of upside potential do you see here? Do you see more potential partners being in discussions, or how big is this market for partnerships?
Yeah, I mean, one of the things I'm really pleased with the News Corp one is it's very a perfect demographic that they operate with that matches the products that we and the solutions that we offer within the media business. So I think we would like to focus around similar structured deals. We've seen some very positive results. We only launched it in just around the World Cup, so early days, but we're very pleased with the initial results. And we've seen that, and obviously we're expanding with the Sun, etc., into international markets as well, which is a positive step forward for us, and therefore we see opportunity in other markets with other potential partners as well.
And just one more on partnerships. What is the kind of stability in these deals? I mean, do you have like a 3 to 5 year deal, and what's the risk of them leaving after that, going somewhere else, or doing it themselves and so on?
Yeah, I mean, of course, as always, it's going to be something you're going to manage in risks within the business, and that's quite specific to that area. We will always focus on the product and the delivery of the partnership, because we see the upside for us, and therefore it has to be mutually beneficial. And we believe that the technology that we're helping to apply to the website portfolios that they own, as well as the content, should be market leading, and therefore that will prevent or mitigate that risk.
Right. And one more on the AskGamblers acquisition. There was some other assets included in that. Have those progress as expected, and the brands that you see more potential than you expect, or less potential?
It was one of those assets was one of the ones we migrated very quickly. I think I'm really proud of the team to be able to execute that. They went in with a plan, they went in with a technological understanding of how to do it. And again, the fact that we've built such a great marketing technology stack behind that media business actually enabled us to do that migration of one of their main assets outside of AskGamblers in 2 months, basically. So I think we're really pleased with how that developed, and we see potential now to be able to really start working on the product and bringing them back forward.
And I also think you mentioned 5 new websites being launched in media. I don't know what the kind of rate of new launches is there, but is that more than normal for a quarter, and any specific market or specific products that you're aiming at?
No, I think, again, we just continue to push towards geographical diversification. It's been a key theme of the media business for the last 3 years, and has been a key driver of the growth. So we're launching probably on that run rate, I think, if I compare to previous quarters as well, but very pleased with being able to do so effectively and efficiently. Again, we've seen a number of new markets being key growth drivers for us across Latin America, and that's demonstrated in the numbers that we presented today and the distribution. So we continue to pursue that strategy, and we believe that the websites we launched today will provide growth opportunities for us there next year and the year after, and perpetually going forward.
Right. And you also mentioned the US market. You see a lot of traffic growth. How about the revenue from the US market?
Yeah, I mean, it's still growing. I mean, as a total percentage, it's relatively small comparatively, but we still see a lot of potential in there. We do our investments in that market in a disciplined manner, and a manner that we believe will be accretive long term, and while also pursuing a number of opportunities outside of that market. I mean, again, Latin America, several growth markets in Europe as well.
And moving over to the platform and sportbook business, a few questions there. You saw a very strong Q1 here, both in top line and profitability, and a specific that drove this in Q1?
Yeah, I mean, it's not only the fundamentals that I talked about in the presentation previously around that how the software as a service model builds and continually drives forward, but also the fact that we've been historically launching new customers to add into that mix, and then importantly the enterprise solution, which as per the release also came with a meaningful setup fee as well during the period. And we see that particular solution has a demand in the market, so we anticipate being able to pursue those opportunities, further of those opportunities as well.
And this new enterprise solution, how big is this market compared to the regular clients or those that you're targeting today?
Yeah. I think it's a really good question, and one we're trying to kind of map out. I mean, one of the things we saw, it was about 2 years ago, and we saw that there's definitely a demand for this kind of solution where, and this normally tends to be from larger, more sophisticated or more mature, potentially operators who have a technological ability themselves, and a really clear vision and know exactly how to execute on that, both technically and operationally. So I think that physical number of those opportunities is probably less than the software as a service structure, but obviously the materiality of those contracts tends to be larger as well. And we're really happy to be able to go after that kind of opportunity. And as I said in the presentation, we've seen this developing and this demand kind of arising, but we don't think in the platform business and then in the sportsbook side as well that anybody is really addressing it properly. It's kind of more ad hoc. So we really wanted to create a technical solution. So around 2 years ago, we started building a technological solution that would be perfectly catered towards that and enable people to really build on top.
Yeah. And you signed one client new, and can you say if you are in discussions with more, or is it too early to say anything about that?
We continue to look at the various opportunities on a consistent basis and identify and target customers who we think would be appropriate for this kind of solution.
Right. I mean, on top of this partly impacting a strong growth there, I think if I looked at the cost in the platform of sportsbook, it's been very stable and the top line is growing. So you see some margin expansion. Is this driven by synergies? And how far have you come on the kind of 6 to 8 million savings that you targeted?
Yeah, I mean, we've made some really good progress. I mean, obviously, as always, when you're doing kind of optimization programs, sometimes the cost-related savings follow on in a couple of quarters post the actual execution. We've always said that we were going to pursue growth as well. So in areas where, for instance, we're launching the sportsbook in North America, so we've been investing in certain areas, the enterprise solution, etc. But that core kind of more historical business, if you will, we've seen the good run rate decrease, and we're anticipating continuing optimization and realization of synergies over the period. So we're satisfied where we are. We continually focus on the business and optimization, balancing that growth opportunities with the cost structures. We feel, I mean, again, if we look at a broader and longer term basis, our cost base has been more or less stable and declining now over the last few quarters. And we've seen that despite the revenue growth. So we really believe in being able to operate from a kind of base that we're at now with a decreasing base over time and scaling up the revenue growth that's going to contribute to that margin expansion and the cash flow conversion improvements, etc., that we've already started to demonstrate, and therefore being able to bring that forward and continually improving it. It's the entire teams across the group are entirely focused on making sure that we're doing everything in the most effective manner on a consistent basis. And
you mentioned that you had migrated the legacy sportbook fully now.
Yeah.
Did we see the kind of synergies from that this quarter, or will that come in the coming quarters?
That will come in the coming quarters. So as we kind of decommission the historical one that was completed in April, again we did a number of technical integrations. I spoke at the end of last year saying that we completed the technical integrations, then we do the migrations, we do operations, and we're rolling out our first combined customer together now as well. So all of these kind of built a momentum, but it's a very big and important lift, and we said at the beginning that we would do it towards flawless execution, not rushing it through time, and we feel we did that, and that was exhibited by the actual largest customer being migrated with zero downtime, for instance. We were really, really pleased with how the development went, and again, testament to the teams and the technology, and now we can really go out and demonstrate that offering on a fully fledged basis.
Right. And you also mentioned that the US is a market where you're starting to launch in some sense, I guess. You received licenses in Pennsylvania, Maryland for the platform business. Are there already clients in the kind of integration phase here? Or
correct.
Yeah.
So we have clients both in the integration phase for both of those markets. So we're anticipating go lives. Actually, should be relatively soon for one of them, and the other one is waiting. We've completed our side of the project, and we're just waiting to go live, green light from the client.
And you also had a slide on the revenue share from locally regulated market or soon to be regulated, which was 91%. Yep. What was this number? I mean, if you look back a few years, and what's kind of progress been, and has this been driven by exclusion of markets from you, or that markets have been regulating, so to say?
I'll start with it's driven by the fact that we've been focused on the growth and entering into regulated markets. A couple of years ago we had 8, 9 regulated markets, locally regulated markets that we're operational in. We're now operational in 30. So, and we have another 7 or 8 in the pipeline as well. So it's been driven by our strategic action to drive into those markets and to acquire and to partner with customers in those locally regulated markets. Some of them have been obviously like markets like Holland, etc., have turned off over time as well. But the main driver has been our approach to how we operate in that sense. I don't remember exactly what the percentage was a couple of years ago, but I think more around the kind of 65-70% range. And we continue to see that grow. I mean, we're anticipating other markets to turn, and that's why we have the soon-to-be regulated structure in there as well. And we were concisely conscious of that as well.
Right. And how are you typically impacted when the regulation happens? So do you see a lot of impact from tax changes, regulatory change? I guess it can vary a lot from the market to market.
It does. I mean, we saw historically in Germany, it had quite a big impact that we managed to navigate and mitigate around. I think from an overall basis, because also we have been focused very much on that diversification. We end up protecting ourselves quite significantly from those changes so that we can continually go through. And it also brings with it often quite a lot of opportunity because there are people waiting for that regulation to enter. So with a solution such that we have in the platform and sportsbook business actually provides a very strong sales opportunity point at that point of time and for regulation.
Another question on the cost in the platform business, or maybe your overall cost. You increased the capitalization cost a bit this quarter. I think you mentioned at least year-over-year. I don't know if it was quarter-over-quarter. Is that something that was specific for this quarter, or is this kind of a new level that will be?
I think we're actually slightly down on a sequential basis, if I'm not mistaken. So that's actually coming down on the run rate. Right. But comparatively, last year in Q1 we didn't have Sport & Co. So and also the media business has been investing in their technology structures over the past period. So that it's a year-over-year, but not a like-for-like comparison point. So as we look at the run rate from Q4, it's actually coming down. Right.
And you did have strong cash flow this quarter, operating cash flow. Was there something on the working capital that was, I mean, a positive benefit this quarter? Or
there was some around some of the movements. It's a little bit of a complicated quarter when you have the movements around the acquisition of our Gamblers, because obviously we had an outflow there, we had inflows from there structurally. But to kind of back to the operational aspect and the way that we kind of calculate it from a real kind of operational cash perspective, we're pleased with how that's developed. I mean, I mentioned in the summary slide there that we're actually, the ratio of cash conversion from EBITDA, etc., is up by 36% year over year, and we continue to focus and keep that as an internal main KPI for us, so that we're always seeing that cash conversion margin and therefore free cash flow is improving over time.
Right. And regarding the potential split up, and you did say you have strong progress during the quarter. Can you say anything about what that means? Is it that you have, I mean, is it supportive of a split up, or strong in the sense that you have done a lot of progress?
It's a difficult one as well, because there's quite. I suppose that you would say that technically there's a lot of elements that we had to map out before. I mean, as I've always said, the kind of operational, like the core operational structures are run independently. However, there is a legal, financial complexity to any kind of potential spin-off project that we have to work through, and often that comes with a lot of consultations with various financing and legal experts in order to make sure that we do it in the best way. I mean, this isn't. We want this to be we're doing this because we believe it's the best ultimately for the company's long-term aspirations and then for shareholder value as well. So we want to make sure that we execute it in a superb manner, as we do with everything. So therefore we're making sure that we do this planning in a very methodical way. So then when we move into the execution phase, we know exactly which companies need to be moved, carved out, whenever there's an enormous plethora of various different tasks that we need to get through.
Right. Check if there's any questions from the audience here as well. One also on platform brands. I think it decreased sequentially. Do you still have some clients that are moving out or closing down
exactly.
brands?
There was a couple of brands that, I mean, some of our smaller clients have a handful, both in Q4 and in Q1, have struggled with the macroeconomic environment to receive funding. So we had a couple that fell away due to that. again, I mean, the results are a testament to the fact that we've been continually securing new revenue streams and continue to do so going forward as well, to also protect us against any potential risk sides in there. And as we develop as a company, we get better as well at being able to identify potential weaknesses in such like that. So, yeah, there's a small drop off there as well. It did impact the numbers, but you know, as I said before, we're very pleased to be able to kind of continually bring up the diversification, both in terms of client concentration, geographic distribution, that will enable us to continue to grow the business despite any kind of headwinds that come through.
Yep. And this, you might partly answer this already, but there's a question about the time frame for the strategic review. Any firm time frame there?
We're not going to provide a firm time frame. And again, like, the priority here for us is to execute it as best as possible, and to do so to make sure that we have everything in order and that the companies are in the best possible place to thrive post a potential spin-off. So therefore, we're not going to provide a specific timeline. And also there's a macro environment that we also need to consider about when I think we're in a place where we're operationally able to spin off the companies, and then we can pick our timing as to when to do it on the macro level.
Right. Also, one question on growth in media, which was the organic growth strong, but a bit softer maybe that we saw than what we saw in 2022. And the question is, what's the driver here? And do you think media can accelerate growth looking in the rest of the year and beyond?
Yeah, I think, Q1 is normally a bit of a weaker seasonality-wise. We came out also of the back of a very, very strong Q4. We see still significant opportunities across the business. As we've also talked about in the past, as well as how we control marketing spend. And if we see that the ROI isn't there, then we're not going to pursue growth blindly if the ROI isn't there. So a number of contributing factors to it. But we see an enormous potential, and that's why we're consistently launching a number of new markets across the group, media group.
Right, and also a quick question on enterprise solution, and I guess this is a little bit difficult to answer, but a question on the average value for enterprise solution customer.
Yeah, I was anticipating this. We're not going to go into the specifics. It's for us, it feels very commercially sensitive because the design of the solution and therefore the design of the commercial agreements are also very bespoke to the nature of the different clients that we're approaching with this, and how they would like to run this kind of structure as well. I would just refer back to what we kind of said in the original press release, where we see that the initial value, both in the setup fee, is materially above average, as well as the contract value being above average in that initial term period.
Okay, great. I think that was all questions we have there. So thank you very much.
Perfect. Thank you very much, Omar. Thank you very much. Thank you, everyone.